Hello traders, and welcome to a new video series of mine. So in today's video we will be talking about reading sentiment. I've talked about sentiment in the past in relation to order flow, but today's sentiment is going to be looking more at long versus short positions. For those who don't know, there are three types of analysis in the market. We have technical analysis, which is looking at indicators, and when those indicators go to extremes and when they have divergence. We look at Elliott wave theory, and we look at price trends. That's technical analysis. We have fundamental analysis, which is looking at news and also looking at evaluation of an asset. So for evaluation of Bitcoin, that would be looking at the difficulty, looking at the hash rate, looking at transactions value, transactions daily. That is fundamental analysis. Then you have the third type of analysis that's not as well known, but is used by the top of the top, those institutional investors and traders, which is sentiment analysis. The goal of sentiment analysis is to look at the market from the lens of looking at it, looking at the person, and what a lot of people do. And the way that sentiment analysis make money is looking for when many traders go on one side and then taking the other side. And that might sound a little weird. Wait, if everyone buys, why should I sell? And if everyone sells, why should I buy? That doesn't really make sense. Well, the reason why you want to do that is because of this simple example that I've given many people. If you have 10 people in a room and they can buy or sell an asset, and let's say that all 10 people buy an asset, can the price go any higher if they've spent all their capital? No, the price can't go any higher. That would be overbought, because once everyone buys something, the price physically can't go any higher because there's no new buyers. Same with selling. Let's say those 10 traders go to the vendor and they sell the asset, every one of them sells. Can the price go any lower? Absolutely not. The price can only stall or go higher. And if everyone buys the asset, the price can only stall or go lower. So what we want to do is use these sentiment analysis tools to find those spots where everyone's bought or where everyone's sold, and then do the opposite. So that's what we're going to do today. And that's exactly what determines market movements: buying and selling of individuals and bots. Gotta love the bots. So I'm going to pull up a tool that I've recently found. I really should have found this tool a very long time ago, but it's Bitfinex. It's bfxdata.com, and what it looks at is three different metrics, which are buy-sell ratios, buy-sell volume ratios, and long versus short positions, margin trading wise. And I know that when I pull up this tool, it's going to look very complicated and complex. So what I'm going to do in this video is just focus on two parts of one indicator, so that by the end of this video, you will have tools to analyze the market from a sentiment mass psychology standpoint. I decided to do that other than talking about every single indicator, talking about every single way to use them, because I think that the viewer probably won't remember much of that, but instead focusing on a few very important things for this first video I think will be remembered. So without further ado, let's look at the tool. We're going to do two things today. The first is we're going to look to spot reversals using the 60% and the 40%. I'll get into that. And then we're also going to be spotting healthy and unhealthy trends using spikes in open positions. Okay, let's look at the tool. So, as I said before, this is bfxdata.com. We have three metrics. We have the buy-sell ratio, again. We have the buy-sell volume, and we have long versus short margin trading positions. Today, we will only be focusing on this right here. So when you pull up the site, the first thing that you want to do is hit this change positions view, because as you can see, this is just raw data of the amount of long positions that hold Bitcoin and the amount of short positions that hold Bitcoin as well. So what we're going to first do is hit that change positions view so we can get percents. And then we wanted to go to the 3-month because that's the time frame I'm going to be analyzing. So what do we see here? Well, we can see that in the red, this is percent short positions, and it will change. And in the green, we have percent long positions. And the amount doesn't really matter as much, but what matters a lot more is the percent. Looking at how many traders are long, meaning they believe the asset's going to appreciate, versus how many traders are short, meaning they believe that the asset will depreciate. Okay, so let's talk about the first way that you can use this complicated tool to simplify it and to trade profitably. So the first thing that we want to look at is the 60-40 ratio. With overbought and oversold on Bitcoin, with it being such a big market, we want to see, when price is going down, we want to see that 60% of positions are short. That would mean that the market has been oversold. And if the market's going up, we want to see that 60% be long. That would mean that the market is overbought. So now let's look for examples in the market. So the first example I have here is right here. You can see that 62.5% of Bitfinex positions were short right here as price moved down, hit this extreme. This would be a fantastic spot to buy. This would be trading against the market, and if you had bought here, you would have caught really no downside, honestly. If you had bought here at this point or at this point, you really would have caught all of this uptrend with very, 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 very minimal loss. So this would have been fantastic trade against the crowd, as you can see right here. Just looking at that oversold reading. Now we have another oversold reading right here. So as you can see, price moves up. You have some support here, and then you see that price begins to move down to that support level again. But what we see at this support is that 59.9% of positions are short, meaning that the majority of the market believes that this market's going to continue going down. This is oversold right here. So if you had bought this, then you would have caught all of this by just using those 60-40 levels for sold and overbought. And now for an overbought reading, we can see that the market's moving up, as you can see. Look at that BTC USD long position percent. And then we get to a point where the market is 60.5% long, as you can see right here. It's around 61.7% here, and then the market begins to stall, and we have the majority of the market have bought. This would be a great place to take profit or to short-term short sell. As you can see, price immediately moves downward as the market is overbought and exhausted. So we get this. So these are just some easy ways that you can find oversold and overbought readings by just looking at those 60-40 levels. Okay, so the next thing I want to talk about, let me go back to my video overview. We just talked about spotting reversals. Now let's talk about using spikes in open positions to spot a healthy versus an unhealthy trend. Okay, so beyond just looking at 60-40s, you also want to look at open position spike. So if you are in the market and you see that the market is oversold, as you can see right here, you do not want to see that continue to be oversold in the market. You want to buy, and then you want to see a lot of buyers buy right after you, because the trader who makes the most money in the market is going to be the first one to act. First person to sell in a downtrend has the best price. First person to buy in an uptrend has the best price. So if we want to be that first person, how do we do that? Well, after we buy using these oversold and overbought readings, we can see that what we want is a spike in open positions of, if the market's going up, we want to see a spike in long positions. So let's look right here. We have a price spike, as you can see right here, and it is confirmed with a spike in percent of long positions, as you can see right here. We can see that we go from 48%, as you can see right here on my top part of the screen, 48%, and then as this spikes, we go to 55%. So that's a pretty large spike, and then up to around 57. So we get around a 10% spike, more or less. And this spike right here really instigates the uptrend. It's this mass of buyers who are piling in at around the beginning of this uptrend, as you can see right here. This is an uptrend, but this is when the uptrend really begins to take stead. So this is when we want to look to buy. And then you see all these traders who enter the market around here. You probably want to enter the market if you haven't already, because you have many traders who are opening long positions around here. So that would be a fantastic volume spike to see. We can actually see this spike again, and one way to find what they look like is this right here. That quick fall off in percent short positions is basically the same exact thing as a quick percent gain in long positions. So let's look here. We have a price spike right here, and we have a massive open long position spike as well. We go from 43.5 up to just after this, after I think that's a few hours of trading, we go from 43% up to 56%, a 13% increase in long positions versus short positions. And this is another fantastic area to buy. You can see that we are trading at a, looks like a symmetrical triangle to me. Yeah, that does look a lot like a symmetrical triangle. And then you have a breakout. And then when you look at that breakout on your chart, you want to look at the at bfxdata.com and see, hey, is there a large is there a large increase in open long positions? And yes, there is a large increase in open positions right here. And that would be a fantastic place to buy. So I know that might seem a little confusing. I might be talking about two different things here, but it's really not. One situation is when the market's going down and continue going down, you need to see oversold. And that's with a sustained downtrend. At the beginning of a downtrend, though, you want to see, if you're shorting the market, you want to see a spike in short positions opened. Those are two completely different things. Even though they might overlap a bit, they mean the exact opposite. So you can see here that it didn't really spike that much, but it went down to that 62.5%. This would not be a good time to enter a short. As you can see, the market's already moving down, and quite slowly too. If this market was moving down very quickly with a very large open short position increase, that might be a good short. But with this market moving slowly, goes down to that 62.5 level, that's a buy. But this is different because this volume spike is supported by a very large increase in buyers. So that's really going to be it for the main material of this video. Really, all you're using this tool is to look for spots where price might have reached a minima or a maxima, as you can see, like right here, minima here and a maxima here, a short-term maxima, and just looking at those 60-40 levels to spot those. And then you're also going to be looking at spikes. So you want to see a spike if price is going down very quickly, like that. You need to see a spike in open short positions to make sure that the market move is supported. Now, if you don't see that and you see that not many traders are really jumping in on this spike, then that might not be a supported breakout. So yeah. So that's going to be it for the video. I hope that you understand the majority of what I talked about today. I know it's a lot. Looking at sentiment kind of tools can be kind of complicated, but that's why I'm making this video. I just want to simplify sentiment to just basic rules that you can use. And if you want a new day trade using this, go right ahead. You can hit 7 days for a 7-day market, and it's gonna be a little bit flatter, but that's natural because there's less price change. You can see it's flatter here, but you can still absolutely use the tools I'm talking about right here, as you can see. And one you can actually see right here. You can see that around here we have massive oversold with 60% being sold right here, 61.4. And if you had bought, you would have caught that. So, and then you can also see when BTC long positions get very high. Actually, not really that much on this chart. In the past 7 days, we've had a lot of shorts entering the market, as you can see right here. Okay, so that's actually going to be it for this video. And how this is just a quick way how to day trade it if you want to go to the 7-day or use the 14-day if you want. These two are going to be fantastic. Avoid this one though, too short term. These two are great. Yeah, so we've gone over reversals. We've gone over a healthy trend with a spike in open long positions if we're going up, and a healthy downtrend with a spike in open short positions if the market will continue going downward. That's going to be it for part 1. Part 2, we'll go over what is right beneath this, which is looking at volume, which is slightly easier to analyze than open versus short positions. If you have any questions or concerns, leave them in the comment section below. Thanks for watching.